Good evening and good morning to everyone. Welcome to India Latin America Trade Gateway, Unlocking Opportunities Through Trade Finance. This is a landmark webinar, the very first joint initiative between India Exim Bank and ALIDE. Tonight's dialogue aims at deepening economic linkages between India and Latin America, and by facilitating partnerships and expanding opportunities for exporters, importers, and financial institutions. My name is cie𝗽chị𝗿𝗂𝘁𝗂𝗏𝗱𝗡𝗀. I'm Assistant General Manager at Exim Bank, and I'm going to be your MC for today's webinar. Before we begin, there are a few housekeeping announcements. All participants would be on mute. For any questions, please use the Q&A feature at the bottom of your Zoom screen. We have a dedicated Q&A session scheduled in this program today. You can also use the chat function to share your comments or any technical issues. This session is being recorded, and I just thought I should be informing you all about the same. Let me just set some context to today's conversation. Trade between India and Latin America is growing steadily across diverse sectors. Despite this momentum, both our regions are yet to tap the full economic potential and the complementarities. There lies an extraordinary opportunity between these two regions. Over the next 90 minutes, we'll hear from our esteemed speakers on available solutions and, most importantly, engage with industry practitioners who are actively building these bridges across our regions. Without further delay, let me invite our first speaker for today. It gives me immense pleasure to welcome Ms. Harsha Bangari, Managing Director of Export-Import Bank of India, to deliver her opening remarks. Ms. Bangari brings over 3 decades of rich experience in cross-border finance and banking. Since joining the bank in 1995, she's held leadership positions across various groups in the bank, including Treasury, Overseas Investment Finance, Corporate Banking, Risk Management, and Project Finance. A chartered accountant and an alumna of the Kellogg School of Management, Ms. Bangari's experience in international capital markets and project finance is widely recognized both nationally and internationally. Ms. Bangari, we look forward to your opening remarks, please.
Yeah. Thank you, Snehal. Mr. Edgardo Alvarez, Secretary General ALIDE, distinguished speakers from ALIDE, banks and industry, colleagues from Exim Bank, ladies and gentlemen. It is an honor and a privilege to welcome all of you to this webinar on India Latin America Trade Gateway, Unlocking Opportunities Through Trade Finance, jointly organized by the Export-Import Bank of India and the Latin American Association of Development Financing Institutions. The theme of today's events highlights the growing economic engagement between India and the Latin America and the Caribbean region. It also underscores the critical role of trade finance in strengthening this partnership. The presence of representatives from banks, financial institutions, and the private sector from both regions today reflects a shared intent to further strengthen the bilateral ties and unlock new opportunities for trade and investment. Ladies and gentlemen, bilateral trade between India and the LAC region has grown steadily over the past decade, rising from about $33 billion in 2015 to nearly $47 billion in 2024. In 2025, bilateral trade is set to surpass last year's level with $33 billion of trade already recorded during the period January to August 2025. Indian companies are increasingly exporting engineering and capital goods, chemicals, and pharmaceuticals to the LAC region. At the same time, countries in the LAC region have emerged as important suppliers of commodities and natural resources for India, including gold, mineral fuels, mineral ores, and base metals, etc. However, despite this progress, trade between the two regions remains below potential, considering their large economic size and strong complementarities. Greater collaboration in trade, finance, and technology can help unlock the untapped potential and strengthen partnerships. One of the key barriers to trade is the availability of trade finance. As per estimates, the overall trade finance gap in the LAC region stands at nearly $350 billion. Declining correspondent banking relationships and high-risk perceptions further exacerbate these challenges. Recognizing these challenges to trade, Exim Bank introduced the Trade Assistance Program in 2022. Under the Trade Assistance Program of the bank is bridging the financing gaps in trade transactions by providing an effective bridge between local banks in partner countries and banks in India. In the LAC region, the bank has partnered with 25 banks under the program. And till date, the bank has supported nearly 44 trade transactions valued at $41 million across countries such as Argentina, Colombia, Ecuador, Honduras, Nicaragua, and Peru. These transactions may not have materialized in the absence of support under TAP. The bank has also extended a credit line to Banco Santander, Brazil, and its branches for financing import of goods and services from India. Alongside trade, there is also a growing interest amongst Indian companies to strengthen their value chain linkages through investments in the region. Exim Bank has been supporting such investments under its Overseas Investment Finance Program. As on November 30, 2025, the bank has provided finance to 37 ventures set up by over 26 companies in 7 countries across the LAC region, with total support of nearly $570 million. Besides trade and investment engagements, India has also emerged as a trusted partner for supporting the developmental priorities of partner countries in the LAC region. The lines of credit extended by Exim Bank at the behest of Government of India are supporting a wide array of economic and infrastructure projects across the region. The bank has extended 34 Government of India supported LOCs valued at over $735 million to 6 countries in the region. These LOCs are facilitating access to essential infrastructure, improving livelihoods, boosting agricultural productivity, enhancing industrial output, and promoting sustainable development in partner countries. The Government of India has set a target of scaling up bilateral trade between India and the LAC region to $100 billion by 2030. Amid the heightened trade uncertainties and large trade finance gaps, achieving this target will require close collaboration amongst banks, development financing institutions, private sector, and governments. Against this backdrop, today's webinar provides a platform for stakeholders to discuss and identify practical solutions to unlock trade and investment opportunities. I am confident that today's discussions will contribute towards building a deeper and more resilient India-LAC partnership. Thank you, and I look forward to engaging and fruitful discussions.
Thank you, Ms. Bangari. May I now welcome Mr. Edgardo Alvarez, Secretary General of ALIDE. Mr. Alvarez brings a wealth of experience to this panel. His distinguished career includes leadership positions at Banco de Comercio, Agrobanco, and cie__Peru's Development Bank. He has also served as an international consultant for the Inter-American Development Bank. In addition to leading ALIDE, Mr. Alvarez also serves as the Secretary General of the World Federation of Financial Institutions for Development. Mr. Alvarez, we welcome you for your welcome remarks, please.
Thank you, Shinayal. And thanks to Ms. Harsha Bangari, Managing Director of India Exim Bank, and colleagues from the esteemed bank, cie___Peru𝗶𝗱𝗱𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 panelists, dear participants, good morning and good evening to all of you. It's for me a great honor and privilege to bring you this joint webinar with Exim Bank from India, a distinguished extra-regional member of ALIDE, which regularly joins us at our annual meetings, sharing its best practices, making proposals and programs and practices and facilities to continue trade even during time crisis, as well as presenting studies on the prospects for a trade relationship between our two regions. They also hosted a mission of bankers from ALIDE and members from ALIDE's members at his headquarters, and because of the excellence of his programs, has won ALIDE awards for best banking practices in the extra-regional bank category. His presence in our region has been strengthened through the opening of its representative office in Brazil. Well done, and we hope you continue with this opening new offices, and as I mentioned before, Ruiz, we will welcome you. It is important also to acknowledge and mention the active participation and cooperation of India Exim Bank's team to this seminar, which now added a close out the year of ALIDE's activities for its members. For this cooperation, we thank you, Mr. cie𝗽liche𝗿𝗂𝗶𝗱𝗱𝗀𝗀, on behalf of ALIDE and our network of development finance institutions. We believe that this joint webinar comes at an opportune moment as conclude this 2025 year in which, despite the global and trade tensions that have been developing for some time, we see resilience in world trade. According to UNCTAD, the United Nations Conference on Trade and Development, for the first time, it will exceed 35 trillion of US dollars, an increase of about 2.2 trillion US dollars, and compared to 2024, it means almost 7%. And what is really remarkable is that this growth is driven by the global south, with development economies leading to this expansion, particularly through the South-South trade, with growth levels higher than the world average. In this context, the challenge is no longer simply to trade more, because how to take part in the international trade means with what capabilities, with what financial instruments, and with what degree of resilience to external shocks. For development banks, this opens up a key area of action, considering, as UNCTAD itself points out, that more than 90% of world trade depends on trade finance, even more so in developing countries, where access to affordable credit is limited, and any change in financial conditions can hinder trade transactions that would otherwise be viable, as it was mentioned before. Therefore, for Latin America and the Caribbean, it's particularly important to unlock opportunities with important and expanding markets such as India, whose trade volume, we believe, falls short from our potential. This is where our financial institutions and trade finance must play their part. Platforms like ALIDE must support the strengthening of financial relationships between our banks and with the private sector to internationalize the companies. This aligns with one of ALIDE's objectives, to promote business management and regional financial cooperation, thereby encouraging their contribution to the integration of Latin America and the Caribbean with the world. This joint webinar seeks to reflect on these challenges and opportunities and to contribute concrete elements to strengthen the role of our institutions in supporting trade and productive integration. Thank you, and I wish you a fruitful webinar, happy holidays, and a great 2026.
Thank you, Mr. Alvarez. May I now request Ms. Bangari and Mr. Alvarez to kindly have their cameras on for a photograph, please. Give us a moment. They're just trying to have the screen linked. Andrea, if you may please put the spotlight on both Ms. Bangari and Mr. Alvarez. Thank you. I'll just be taking a picture now. I'll be taking one more picture. Thank you so much. With this, we'll be proceeding with the next session in terms of the presentation. We learn more about ALIDE's offerings and services. To take us through this, I am pleased to introduce Ms. Andrea cie𝗽chị𝗿𝗂𝗍𝗂, Specialist in Institutional Relations Program at ALIDE. Ms. cie𝗽chị𝗿𝗂𝗍𝗂𝗧 holds a degree in Business Administration with a specialization in marketing. She plays a key role in strengthening ALIDE's inter-institutional relations, managing new member recruitment, and organizing forums and technical meetings that bring together development finance institutions across Latin America. Andrea, over to you, please.
Thank you. Thank you so much, Nihal. I'm going to share my screen. Great. I hope you can see. Good morning.
Yes.
And good afternoon to everyone. I'm going to make a brief presentation of ALIDE, the work we do, and how we contribute to the economic and social development in Latin America and the Caribbean. For those who are not yet familiar with ALIDE, we are the Latin American Association of Development Financing Institutions. We have more than 55 years of action, and we can be defined in 3 ways. The first one is that we are a community of financial institutions that shares their best practices in programs, products, or financial solutions for the advancement of the productive sectors in the region. Second, we are a specialized forum for the analysis of economic and social development financing in Latin America and the Caribbean. Our main event where this analysis takes place is our ALIDE General Assembly. It's the principal congress that we hold each year and attended by all of our members and, of course, other financial institutions all over the world. And finally, we are also an organization of services that seeks to strengthen financial institutions operationally and institutionally so they can better fulfill their mission of financing development in their countries. As an organization of services, we provide training and capacity building through courses and seminars that could be in person or virtually. We also have technical assistance and internships. We organize forums and technical meetings for the exchange and sharing of experiences and best practices, such as our General Assembly that I mentioned before. We also promote financial relations between banks. We prepare economic studies with a pragmatic approach. We produce documents, papers, concept notes, etc. And of course, we disseminate information and documentation to all of our network. In addition to this, we also have our technical committees in order to respond to the specific challenges of each productive sector. These technical committees serve as advisory bodies to the association, and they focus on the different topics as agriculture and rural, foreign trade, SMEs, environment and climate change, project and investments, etc. I just want to highlight our technical committee for foreign trade, business and investment financing This technical committee collaborates with the development finance institutions in implementing financial, institutional, and management mechanisms aimed at promoting growth and diversification of exports from Latin American countries. Of course, in the area of business and investment, promotes the identification, promotion, and financing of joint investments and projects. These are our memberships. We divided in 3 categories. We have our active members that are the public development banks of Latin America and the Caribbean. We have our associate members that could be international organizations, multilaterals, cooperation agencies, and also other public development banks from other countries. And we have our collaborative members that are other financial institutions, such as regulators, superintendencies, that share and support also the economic and social development financing. This membership consolidates ALIDE as a network and as a platform for the exchange of knowledge and best practices, not only at a regional level, but also globally. We act as a voice and a link between regional vision and the needs of our region to the global financial community. We also contribute to strengthening ties between public development banks and other multilateral cooperation agencies or international organizations. And we also act as a bridge to bring international financing or international funding sources to our regional development banking projects. In this framework, I would like to highlight that ALIDE currently chairs the World Federation of Development Financing Institutions. This federation is integrated by the other associations of the other regions from Africa, from Asia Pacific, Islamic, Europe, etc. And this World Federation allows us to bring the voice into the global stages of the public development banks. Now I want to mention about our ALIDE Summit, our General Assembly, that gathered more than 250 representatives from the leading financial institutions in the LAC region and from other regions too, including government authorities, multilateral organizations, and private sectors. It's not only a space for analysis and discussions. It's also a meeting point for establishing and strengthening personal relationships with the senior banking authorities in Latin America and other regions. And of course, it's an opportunity to our partners to show their innovative programs or projects, organizing side events or workshops that we can hold in our summit. Next year, in 2026, we are going to have our General Assembly in Asunción, Paraguay, from May 20 to 22, hosted by our member Banco Nacional de Fomento. And our key topic would be Innovate, Invest, Include, Development Banking, Driving Inclusive and Transformative Growth in the New Global Economic Landscape. We hope, of course, you are all invited, and we hope to see you there. Thank you so much. cije𝗻𝗿, over to you.
Thank you, Andrea. And thank you for the wonderful presentation. May I now call upon Ms. Trupti Mhatre, who heads the Trade Facilitation Group at India Exim Bank as General Manager. She will present the bank's products and services to facilitate cross-border trade and investment, as well as on the Trade Assistance Program. Ms. Mhatre is a chartered accountant with over 2 decades of experience at India Exim Bank, spanning over project finance, trade finance, buyer's credit, lines of credit, treasury, and resource raising. Ms. Mhatre, please take us through India Exim Bank's product offerings.
Thank you, cije𝗻𝗿. I'm sharing my screen. Please let me know once it's visible. It is visible, right?
Yes, it is.
Yes, sure. Thank you. So good morning, participants. I will be presenting, about the Exim Bank for the benefit of the participants, the bank's various offerings, and our new initiative in the trade finance, which is our trade assistance program. About Exim Bank, as you all are aware, we are the set up by Act of the Parliament and 100% owned by the government of India. And we play a role in the policy formulation as well formulation and also financing the economic diplomacy of the country. The objective of the bank is to provide the financial assistance to exporters and importers and for functioning as the principal financial institution for coordinating the working of various institutions engaged in financing of export and import from India. The business profile and various product offerings of the bank include the policy business, which is undertaken on behalf of and at the behest of the government of India, when we support the fund-based assistance for a very long tenure, such as 25-30 years, and these are all sovereign exposures. As also we have a bouquet of commercial business offerings, which includes the fund-based and non-funded support in terms of term loan, working capital, overseas investment finance, buyer's credit. Just to mention the overseas investment finance, as our MD madam also mentioned, we support the Indian companies by way of the extending support in terms of term loan for their equity participation, as well as for extending the loan and setting up their ventures overseas. So we have various, the success stories here, and we have supported a lot of Indian companies for their investments abroad under our overseas investment finance program. We also have a buyer's credit program where we extend medium to long-term financial credit to the buyers of the Indian products very actively. Other program that we also again would like to mention is the credit lines to overseas banks, where the bank extends medium to long-term loans, the credit lines we call it, to the financial institutions and banks overseas, for them to on lend to the buyers of the Indian products and services. And this is a very flagship and widely used program of Exim Bank. On the non-fund based side, we also issue the letters of credit and the guarantees under our non-fund based programs. We also cover the entire canvas of trade finance for MSMEs, especially targeted products for MSMEs who are contributing largely to the India's exports. Under our 𝗰𝗶𝗋𝗱𝗀𝗃 𝗃 program, we support the companies or MSMEs with differentiated products, processes, and technology with potential to emerge as tomorrow's export champions. Under our trade assistance program, we provide these MSMEs and the exporters the credit enhancement to trade instruments, thereby supporting trade involving markets where trade lines are constrained and transactions may not have materialized in the absence of this kind of a support. We also have our 100% owned subsidiary in the GIFT City, where Exim Bank, which is launched to offer the trade finance products, including the export factoring. We also have Exim Mitra, which is available on our website, which disseminates the wide range of information, advisory and support services, and bridge information gaps for exports and export finance. I would take you through the trade assistance program, which is our one of its kind, first of its kind trade facilitation initiative in India to contribute to the reduction in the trade finance gap by covering payment risk as well as the country risk in trade transactions. TAP offers participating commercial banks in India partial or full guarantee to cover the payment risk on banks in the overseas markets. The objectives of this program mainly include increasing the counterparty confidence in the settlement of trade transactions, for generating the incremental exports from India by accessing the untapped and challenging markets, which in the absence of this support under this program, the exporters could not have tapped or could not have achieved these exports. It also provides the Indian companies a market entry mechanism and enhances its geographical coverage. And it also increasingly supporting the MSME sectors in India. Various offerings under this program, we extend the support under this program by way of LC confirmation and negotiation. So under this initiative, the India Exim Bank confirms as well as negotiates the LCs, which are issued by Overseas Bank, our partner banks under this program, for the export of goods and services from India. For this, under trade assistance program, we have total 71 countries covered across various continents, Africa, Asia, Latin America, and the Central Asian region, as EMEA region as well. And out of that, there are a lot of Latin American countries, and we have over 140 partner banks under this program, the new relationships that we have established over last 2 years. We also extend standby LC. Under this mechanism, we undertake to make the payment to the confirming bank of the due amount in the overseas issuing bank fails to make the payment to the confirming bank. We also do the risk participation with our partner banks, which are the LC confirming banks in India. So in case they are having, if they have less appetite on a particular LC issuing bank, or if their limits are insufficient to cover a particular transaction, they seek our participation, and we do support by way of a risk participation under the trade assistance program. We also have a IRU mechanism. We also help through our wide network of the the partner banks overseas. We facilitate the fronting of guarantees at the behest of the other Indian banks, public sector and the commercial scheduled commercial banks in India who may not have the wide network overseas. We also extend trade loans to the borrowers to finance imports of goods from India, and also extend the funded facilities like credit lines to overseas partner banks for facilitating India's trade. These are the framework agreements. We signed the issuing bank agreement with the LC issuing bank to onboard them on this program and partner with them, collaborate with them under this program. The confirming bank agreement is signed with the LC confirming banks in India, and master risk participation agreements again to facilitate the risk participation with the partner banks. We have partnered over 148 overseas banks under the program in last 2 years. Journey since inception, we have facilitated over 1,800 transactions across 56 countries out of the 71 focus countries under the program, which include relatively untapped geographies and countries with higher, medium to higher risk perceptions. We have covered the countries like Bangladesh, Nepal, Sri Lanka, Argentina, Ecuador, Cameroon, Djibouti, Egypt, Mauritania, and so on, to name a few of them out of 54 countries, and supported the incremental exports from the various parts of India. Especially with the Latin America, we have supported so far the volume of transactions to the extent of 40 million, which covers 6 countries, Argentina, Colombia, Ecuador, Honduras, Nicaragua, and Peru, by way of LC negotiation, by way of guarantee facilities, and as well the risk participation. The sectors include pharmaceuticals, agriculture, food, automotive, and engineering goods. The bank has also in active discussions with various partner banks for extending the trade loans. The bank also has signed the issuing bank agreements with few banks, and I would like to take this opportunity to request the partner banks and the participating banks on this webinar to sign the IBA and associate with us under this program so that we are able to support the exports on the India Latin America trade corridor. And we also have the RMA SWIFT arrangements with 17 banks in the Latin American region. These are the list of the banks with whom we have partnered so far and looking forward to the new relationships. And these are the focus 71 countries, as I mentioned, which covers 31 from Africa, Asia, 15 from Latin America. So you would know, I mean, almost all countries where the exports are happening from India to Latin America have been covered under the program, and 10 from Europe and CIS region. Thank you so much. Over to you,
Thank you, Ms.
Sneh.
Matre. Ladies and gentlemen, we now come to our panel discussion on India Latin America Trade Gateway, Unlocking Opportunities Through Trade Finance. This discussion will bring together practitioners and leaders who are actively engaged in India Latin America trade across various sectors, from pharmaceuticals to automobiles, from agriculture to infrastructure. Allow me to introduce our distinguished moderator and panelists. Our moderator for today is Mr. cie_𝗽𝗍𝗂𝘁𝗂𝘀, Chief General Manager, International Relations Group and Corporate Communications Group from India Exim Bank. Mr. cie_𝗽𝗍𝗂𝘁𝗂𝘀 brings nearly 3 decades of industry experience over various leadership roles across multiple locations in India and abroad. I would also like to introduce our panelists. Our first panelist for this panel discussion is Mr. Fausto Caron, Managing Director, Nanofert Brazil. Mr. Caron is an experienced executive with international expertise in the financial sector, particularly commodities, and in developing private business projects across agriculture, healthcare, and real estate. Our second panelist for today is Mr. 𝗳𝗶𝗻𝘃𝗀𝗀𝗀𝗀, Chief Financial Officer, 𝗳𝗃𝗀 Pharmaceuticals Limited. A finance professional with 22 years of experience, Mr. Desai has led key finance functions including project financing, treasury management, and business planning across multi-entity organizations. His expertise will provide valuable perspectives on the pharmaceutical trade between the two regions. Our third panelist for today is Ms. Karen Gracia Mata, Deputy Director for International Affairs, Bancomext, Mexico. Ms. Garcia brings extensive experience in international trade from one of Mexico's premier development financial institutions, offering crucial insights into facilitating trade flows between India and Latin America. Our fourth panelist for today is Mr. Manoj Patil, Deputy General Manager, Eicher Motors Limited. With nearly a decade of experience, Mr. Patil has deep expertise in international business development, channel management, and market expansion strategies for the commercial vehicle sector. Our last but not the least panelist for this panel discussion is Mr. Rakesh Kumar Gaur, CEO, cie_𝗽𝗀𝗃𝗃, an EPC professional with over 40 years of international experience. Mr. Gaur has handled over 100 projects globally in transmission, distribution, and railway electrification across India, Brazil, Canada, USA, and the CIS countries. His vast experience will provide invaluable insights into infrastructure cooperation. I now hand over to Mr. Shivkumar to moderate the exciting panel discussion.
Thank you, Sneha. Very good morning and good evening to all our participants in this webinar from different regions in Latin America and the Caribbean and back here in India. It's a pleasure to be part and moderate this panel discussion, which aims to explore the role of trade finance in unlocking the untapped trade potential between two of the world's most dynamic emerging markets, India and LAC. India and LAC may be separated by geographies, but increasingly they are connected by complementary economic strengthening, expanding demand, and a shared aspiration for a diversified global partners. India's footprint has been steadily growing in LAC, with the region transforming into a strategic business and trade partner for India in the recent years. The trade between India and LAC has been increasing since the last 2 decades and currently it stands over $47 billion. The number, though impressive, still far from fulfilling the potential. Similarly, Indian companies have also made substantial investments in various sectors across the LAC, including energy, mining, agriculture, and automotive industry. The rapidly evolving global trade landscape, particularly trade policy shifts and geographic realignment strategies, are presenting new opportunities as well as important challenges for India and LAC. Another key barrier to trade is the limited availability of trade finance, which we thought we'll focus in this panel discussion. The trade finance ecosystem plays a key role in financing trade flows as it accounts for almost 80% of international trade, fueled through instruments such as letters of credit, supply chain finance, trade credit insurance, and other instruments. It mitigates payment risk, political risk, and even logistical uncertainties, which are particularly important in geographies where business familiarity is low and helps bringing in predictability and reliability in the business. Yet, unmet demand for trade finance remains persistently large. The trade finance gap mainly exists in emerging market and developing economies, with LAC region accounting for a gap of $350 billion, a significant portion of the global shortfall. Declining corresponding banking relationships and high-risk perceptions further exacerbate these challenges. Access to trade finance is particularly challenging for MSMEs, despite the fact they represent approximately 99.5% of all businesses and 60% of formal productive employment in the LAC region. A major reason for the increasing gap is a limited financial depth in the region. In 2022, domestic credit to the private sector in LAC was approximately 50% of GDP, significantly lower than the average for OECD countries, which was over 80%. To overcome the trade finance gap, there is a need for better coordination between the public sector, private sector, and development financial institutions. The role of development financial institutions is particularly fundamental, given their greater propensity to risk and their political capital, while the private sector plays a crucial role in providing liquidity, technology, and expertise to achieve effective financial solutions. Given this background, we are happy to structure this panel discussion, having eminent panelists from key sectors such as automotive, EPC, pharmaceuticals, agri-chemicals, and finally the banking, which is a core for the trade finance. Now, let me start with the Latin American bank, Banco Next. Global surveys suggest that demand for trade finance in emerging market corridors is growing faster than the available capacity, particularly in sectors like commodities, pharma, autos, and infrastructure. Could you please elaborate on the current demand for trade finance in the LAC region for Indo-LAC trade? What products are offered by your institution, especially in trade finance, to bridge this gap?
Banco Mex,
Can
right?
I request Ms. Karen?
Yes, of course. Thank you for the space. Hello, everyone. So let me dissect the question. So first of all, I could not elaborate specifically for all Latin America trade finance, but I will focus on Mexico's case. So I represent Banco Mex. Banco Mex is a Mexico national development bank for foreign trade. We're a state-owned development bank, and we also have export credit agency focused in promoting a foreign trade and the currency of and foreign currency generating activities. So in terms of the demand for trade finance, I would say that the demand in terms of volume is low, but in terms of sums are big. So that is point number one. Point number two is, I wouldn't say also that the capacity of our development bank is surpassed, because the demand is just enough to be covered by my bank, the Banco Mex, or other 5 development banks that we have here in Mexico. Not specifically for foreign trade, but they have like different mandates, and the capacity is more than enough. And regarding what products do we offer, So we have 5 categories. So the first one is direct financing, and that is above $3 million. So the products is like working capital, fixed assets, corporate finance, project finance, and structured credit. For sums less than $3 million, we have we reach our beneficiaries through financial institutions, so mainly commercial banks, and then focus specifically on trade finance instruments. We have letters of credit available for export, import, and standby guarantees. So this can be the primary payments or act as an insurance in case of default. Then we have international factoring. This provides liquidity, obviously, and we also have ECAs, and the ECAs are in terms of guarantees, insurance, and direct lending sometimes. And then that is the second category, specifically in trade finance. And then the third category are guarantees. Those can be portfolio guarantees for our commercial banks portfolios, because they act as financial intermediaries, or buyer guarantees for specific equipment. These are, in terms of sums, a little bit smaller. And then we have a fourth category, which is financial markets and other services. Here we have foreign exchange, derivatives, fiduciary services for our beneficiaries, and foreign currency banking deposits. And then the fifth category of service, which is very relevant, is technical assistance, because we have to start promoting capacity building because as our products increase in difficulty or sophistication through financing, we need to have this education. Yeah, we need to have this capacity building resource for our beneficiaries. So that would be my answer.
It's Ms. Karen. Now I'll from Banco Next, I'll move to Troika. My next question will be to Mr. Jagru. In terms of pharmaceutical industry, they have built a significant and strong presence in LAC markets over several decades, achieved through a long-standing strategy of establishing local marketing subsidiaries and manufacturing facilities across various countries in the region, rather than just relying on exports. From a sector-wide perspective, how has this evolution from pure exports to more localized operations changed the typical trade finance and working capital needs of India LAC pharma trade? Mr. Jagru? You're on mute.
So am I audible? Can I, check with you now? Yeah. So
yes, you're good. You're good.
Yeah. Good evening to the officials of Exim Bank, ALIDE and all the industry, fraternities. In terms of opportunities for pharmaceutical industry, as we have seen, last decade or so, during the pandemic phases, we have all seen, the lack of infrastructure, as well as the need of, global integration between, various important and life-saving pharmaceutical products. As Mr. Alvarez has pointed out, 90% of the global finance currently now depends on the financial structures. Trade finance per se facilitates and enables business reshaping their opportunities, as well as minimize the risk of deepening, worsening geopolitical as well as volatility in the economic parameters. In my opinion, it is also proven that financial market drive the global trade finances as one of the facets of the driver for the real economic driver also. We are on the fag end of the quarter of the 21st century. Now, if we compartmentalize the decades of the global growth, we may observe that while in the first decade the global growth were around 4.5%, which has reduced to almost 3% in the second decade of the century. And due to the uncertainties, the global financial market as well as cross-border transaction, the global growth has even reduced to 2.6% now. The global verticals of global north and global south has also provided us opportunities for countries like India and Latin American countries to increase economic engagement, to build stronger business relationship, as well as the cultural ties. Pharmaceutical industry being India being the hub of the pharma industry, and our ability to do research oriented pharmaceutical manufacturing will provide opportunity for pharma companies to set up manufacturing facilities in the Latin American countries, either by way of an R&D center or by way of manufacturing facilities, or providing CDMO operation right from India to these countries. And we would be building upon this, and we are confident that our mutual ties would not only enable the Latin American countries and Indian operation, but also will be good investment for the human society.
Thank you, Mr. Jagrup. Now I'll move to Mr. Manoj from Asia. Mr. Manoj, in terms of Indian manufacturers have become increasingly competitive in LAC in segments like two-wheelers, small commercial vehicles, and auto components. What sector-wide intrinsic strengths, both at industry and company level, best explain India's growing presence in LAC automotive markets, and how can trade finance structures help reinforce these strengths and support further market expansion? Mr. Manoj.
Right. Yeah, in fact, first I would like to thank for this opportunity, and I will just in one line I will explain that we are the commercial vehicles, producing the vehicles under commercial vehicles under Eicher brand. It's a joint venture between Volvo Group Sweden and Eicher Motor India. So we are leading player in India, and also expanding in the export market. So after growing the presence in Asia, Africa, then Latin America is a new frontier here. And when I was discussing with across, and when I meet with the different friends across the industry in auto and auto component, all are very optimist about the Latin America, and they are looking at Latin America as a new frontier, because there is a huge opportunity, and that is untapped opportunity for the Indian players. And Indian auto industry, you have seen that in over last 2 decades has grown in terms of the technology and the capacity, leaps and bounds. So we are the now third largest automotive market in the world, and fourth largest largest producing country for the automotives. So we have the very developed over the years technology which we can offer the optimum product with the right technology at the right price with the right feature. So which I feel which is a requirement for the Latin American region, the Latin American and Caribbean region. We understand what kind of markets are there over our experience in the different markets. So complete auto industry has understand what requirement of that region is there. So that's why we feel that Indian product can give the right solution. And it is already seen that the two-wheeler industry, like the player like a Bajaj, TVS, is already making the roads, and in many markets they are in the position of leader. So it will be followed by the commercial vehicle industry, and then soon it will be passenger industry. That's how we see the growth for the automotive industry. And yes, the trade finance is the one thing where we auto industry needs support, because it's a capital intensive business. So I think I must congratulate and appreciate the Exim Bank has been instrument of automotive players growth in the Africa region. And now jointly we can look the similar the model for the LAM region, and then yes, opportunity is there, and there will be the huge growth opportunity for the all automotive sector.
Mr. Manoj, now I'll move to Mr. Rakesh from SAE and the kie_ce group. So large EPC projects often involve long tenors, sovereign or sub-sovereign risk, and complex consortia. How can DFIs and ECAs structure financing to make such projects more bankable for both sides?
So, first of all, thank you, Mr. Shivkumar, and my greetings to all the panelists and all the senior members on the dais. Basically, I am from the RPG group, and I just want to share that we are using a lot of products of Exim Bank, whether in various countries where we are working. So the best part is that in this market, Latin American market, EPC projects are not really very successful for the Indian companies because of the bankability. because the risks are different type and currencies are different. Plus, the strength of Indian companies in terms of manpower is not really reflecting here because markets are protected by the local labor laws. But certain countries like Suriname, Guyana, and other places, we are successful and we are working in these countries as a Indian companies. I personally feel that lot of products are very much suitable in terms of bank guarantee, credit limits, and working finance. But something special has to be done to these countries to see that how to cover the currency risk, which is a big fluctuation here, and how to protect the long term of the big EPC complex project, because this goes for 5 years, 6 years, and the bank guarantees are extended for defect liability period. So we have to find out a special modeling for these countries because the geopolitics plays a major role in a long-term project when it is a 5 years, 7 years projects, and that we are seeing what is happening in Bangladesh, we are happening in other countries, what is happening. So these kind of situations are there. So in my view, very project-specific support, especially fine-tuning and finding out the risk, and fine-tuning the product in terms of bank guarantees, credit limits, and working capital. It can be worked out in a special way. But I'm sure Exim Bank is already doing very well in this kind of field. As Manojji has said, that Africa has been built up with the Exim Bank support. Latin American market can also be seen a major potential if we really find out and trade it well.
Thank you, Mr. Rakesh. Now I'll move to Mr. Fausto. Mr. Fausto, there exists significant trade complementarity between the LAC region, a global agriculture powerhouse, and India, which is a strong chemical sector, creating substantial opportunities for mutual economic growth. How can India and LAC region collaborate to foster a robust, mutually beneficial partnership by leveraging LAC's agriculture production capabilities and India's robust and diversified chemical sector? Mr. Fausto.
Thank you. So indeed, the two markets are very complementary. So Latin America is one of the world's most competitive agricultural producers. It will probably increase that position. Brazil, for instance, is expected to grow its agricultural production at a rhythm of 5% a year for the next 10 years. So that means that Brazil will have to import even more chemicals, fertilizers, etc. And this is where India has built deep capabilities. So in chemicals, in fertilizers, and all other advanced agri inputs. I think one of the next step, it should be to move from trade to a partnership model, where instead of being just a pure exporter of chemicals and fertilizers and other products to Brazilian agriculture, Indian players should promote partnerships, joint ventures with local groups, local manufacturing, technology adaptation. That's what we are doing now at cie_/\Innovations Innovations to be more competitive and capture the value-added margin that exists in Brazil for several reasons. We are putting a local facility, manufacturing facility in Brazil, which provides a lot of flexibility, cost competitiveness. Yeah, we're going to have a research center to adapt our products to the Brazilian reality. So I think that's the movement that should happen, and that will certainly require support from financial institutions. Be it for the importation of manufacturing equipment. In our case, we need to import patented equipment from India, but also raw materials that will be required by our local manufacturing facility in Brazil. So I think I would say this is the next step that should be in the mind of all the chain, and that's probably going to happen as we have other players from India that have already very high market share in terms of exporting to Brazilian agriculture. But I think the next step would be to localize production, adapt production here, do joint ventures, etc.
Thank you, Mr. Fausto. I have a follow-up questions to all of you. Maybe I'll go in the reverse order now. So I'll again ask this question to Mr. Fausto. My next question to Mr. Fausto would be, how can trade finance be leveraged to promote more value-added processing, sustainability standards, and technology transfer in agriculture and chemicals rather than limiting the relationship to raw material exports and basic imports.
Yes, so one of the main constraints, I'm talking about Brazil now, but I think it's the reality for most Latin American countries. I don't know so much the reality in the Caribbean, but I think for the whole Latin American and Caribbean, it's similar. So the access to affordable medium and long-term finance, be it trade finance or project finance, in our region is quite limited. So there are high financing costs in Brazil. Currently, the base interest rate is 15%. So on top of it, you need to put sovereign risk, the credit risk, etc. So it becomes extremely expensive locally to finance projects or even the trade finance piece of the equation. So I will give a practical example. In our case, we are looking for the financing, and we have even discussions with Exim Bank to bring an equipment from India to Brazil. That equipment is capable of producing and generating a very high margin, that can easily repay the loan in a couple of years, maybe 2 or 3 years. And after that, we're going to require the inputs to produce here. That will also come from India, part of it from India to Brazil, and that will require trade finance. We need, however, to align that, because when we sell in Brazil, you need to adapt the finance, the cash, the agricultural cycle is quite long. So if I sell today to a client, and that's, or maybe one step back, farmers in Brazil are 2/3 of their financing is provided by suppliers. So seed suppliers, fertilizer suppliers, insecticides, pesticide suppliers, etc. So you provide the products, they plant, they harvest, and then when they sell the produce, they repay the suppliers and the banks. So there's an important working capital leg here that consumes a lot of capital, especially when you're entering the market. So after 1 or 2 years that you have your cash flows working, etc., it becomes much easier to finance. But for new projects, new ventures, you have the whole commissioning of the operation and then selling to receive your first sales, the cash cycle, which is 6-7 months. So you're going to need to buy raw materials, expend on SG&A, produce, sell, and then receive cash or money in 6 or 7 months. So there is space for all these. I think when you add up, in our case, we have received a lot of support from Brazilian government in terms of tax incentives. So we were totally exempted from import tax on the import of the equipment. We also received favorable VAT tax for the selling of the products and import of raw materials. We have received support for the laboratory that we will build, like a research center that is going to be built here. But there is this important financing component that I think the export banks like Exim Bank can really have a very important role.
Thank you, Mr. Fausto. Now I'll move to Mr. Rakesh. Rakesh, recently the Mexican Senate approved tariffs of up to 50% on imports from Asian countries, including India, with which Mexico does not have a free trade agreement. How will this duty hike impact India's exports to region and Mexico in particular? Which sectors will be most affected? Mr. Rakesh?
Thank you, sir. This announcement has come recently, I think, and then effect will be from 1st of January. So people are reviewing the fine prints. But as we know, this is a very calibrated and measured approach by Mexico to see that they are in favorable terms or favorable attention for USMCA, which is coming for discussion again in the next year. So because of that reason, they just want to show to the US that they are totally in alignment and in collaboration with them. The indication is that the countries which are not having the FTA with them, whether it is Asian or any other country, will have the effect of 50% duty. So for us, like steel, the Indian steel and Chinese steel as well as Turkish steel used to be the major sourcing point, and that will get affected. Basically, steel from Turkey, India, China, or even Brazil will have the impact on this. Other sector is automobiles. Of course, 50% duty will make them, their competitiveness will go out of them. What we see is that even the services and IT industries and then some of the products which used to go from India will also have the difficulty on this line. But we are waiting for the fine prints. And once the fine print comes, we will be able to come to know the major impact. But it is mainly to discourage, you can say, China and India dumping to US through Mexico.
Mr. Rakesh, now I'll move to Mr. Manoj. Mr. Manoj, India's vehicle and auto component exports to LAC markets have grown across countries such as Brazil, Mexico, and Colombia. How do typical dealer and distribution arrangements in LAC shape the sector's trade finance requirements? What types of risk mitigation and trade finance structures would most help Indian and Latin American firms to manage currency risk, long shipping times, and after-sales obligations in auto trade?
Yes, as you rightly mentioned, auto industry is very capital intensive industry, and as Mr. Foster mentioned, it's very important to maintain your cash flow in any business. So in this, our distributor partner, normally we work on the channel management, so distributor dealers are there, where they put the order, and when vehicles, there are multiple challenges are there. So first they invest in the infrastructure, the civil work, people, processes, and there is also the network and other things. And then you have to put in the stock and so many things. And in some markets, so banking sector is not very developed. In those markets, they also do the retail financing for the each vehicle sale. So that also put the pressure on their working capital. So in that process, when they look for the expansion, they need the support in terms of working finance. And in some markets like Brazil, Mexico, it's very the trade barriers are such that you need to have some local assembly plant. If not completely localization, at least the assembly type of should be there. So in that case, the Indian importer need the support for that kind of investment, because we auto industry player, we are expertise in our the production, selling, and networking. So what we need the support from the Exim Bank and their different product, which Mr. Tripti was also showing, that if that can help us, so we can focus on our core skill of the selling and expanding the automotive sector and across the Latin America. And we will get the support from our financial institute partner like Exim Bank and ALIDE. So that is what I feel. So this kind of, and there is also risk of the long transit time and the holding stock and their aftermarket requirements for the each market requires. And also there is a currency fluctuation. It's a big risk for auto industry and most of the players other industry which are operating in Latin America region. So the product which support and take care of the risk, so we will be we can work freely and we can go aggressively for our expansion in Latin America markets.
Thank you, Mr. Manoj. Now I'll move to Mr. Jagrut. Mr. Jagrut, with the rising demand for affordable generics, vaccines, and complex therapies across LAC, there's a clear potential to deepen India-LAC partnerships beyond basic formulations trading, getting into patented products, etc. Looking ahead, what kinds of trade finance solutions or risk mitigation tools do you think could unlock new opportunities in areas like local manufacturing, R&D collaboration, and contract development and manufacturing services? Mr. Jagrut?
So I'll put it in 4 different bullet points. Firstly, we need to institutionalize and fix the mechanism of multilateral trade dispute system, thereby reducing the efforts and enforceability of the laws, as well as avoiding any kind of uncertainty of doing long-term and sustainable business. My point number 2 will be reforming the international monetary system. Almost all the panelists have touched upon uncertainty about the foreign exchange markets. So if we are able to reform and realign our international monetary system, that will limit the harmful swings in currency as well as the capital flows. Thirdly, what I think is we need to strengthen the regional and domestic capital market. A robust capital local market would provide us opportunity of very rational rates for raising their long-term capitals. And lastly, what I feel that we need to improve transparency in terms of commodity trading, for example, the pharmaceutical product, as well as access to the affordable trade finance, especially for the initial phases of any business or the mid-scale business. Once you have been able to establish in any territory in a long-term business and a long-term scale or a rationally huge scales, point number 1, 2, 3, which I mentioned, would be automatically addressed. So in my opinion, if we work together in a collaborative and economic engaging way, we should be able to build a stronger tie with Latin American countries.
Thank you, Mr. Jagrut. I'll move from Jagrut to Ms. Karen. Ms. Karen, trade finance continues to remain a key driver for India-led trade and investment growth, especially for small and medium enterprises. In your view, where are the biggest gaps in trade finance in this region, and what kind of practical solutions are most needed to bridge them? Ms. Karen?
Yes, of course. So a bit of context regarding our SMEs in Mexico. So the economics units here are divided in, we have 95% as micro enterprises, then we have 4% in small, medium, and then 1% as big corporations. So having this context, what we see are three main gaps. So first one is formality, the second one is maturity, and the third one is business or financial acumen. So in order for us to increase the demand for trade finance, we need to focus on the formality, the maturity, and the business financial acumen of these enterprises. So the solution basically stands for capacity building, digitalization, and also a serious discussion on what are the flexibilities on the ticket side and where exactly or what is the best financial product for the SMEs. So that will be my answer. And also what we see is a trend in adjusting the ECAs. ECAs are normally focused on infrastructure projects, but we are analyzing where are the pressure points where you can have a little bit of flexibility in order to subject this more to SMEs rather than big companies for infrastructure projects. Thank you.
Thanks, Ms. Karen. So we have some more time. I will ask a follow-up question again in the same order. I'll start with Ms. Karen. But for the paucity of time, I may request you to have a sort of a brief response. So my next question to Ms. Karen would be, experience from other regions shows that collaboration between financial institutions through co-lending and risk sharing can reduce costs and increase access to trade finance. What forms of collaboration between Indian and Latin American financial ecosystem, such as banks, DFIs, ECS, and fintechs, would be most effective to expand trade finance capacity for India-led trade in a sustainable way? Ms. Karen, a brief response.
Yeah, okay, so I will touch just 5 points. So the first one is constant and trustful communication. The second one is a win-win discussion or even a sum zero projects between both Exim banks or both financial institutions. Also, if we have successful case studies, we should aim for long-term relationship. We need to keep track of these mutual beneficiaries. Then we have to share international best practices, of course, and I think this is a exceptional example of this. And the other one, I am very glad that I can share this panel with my colleagues because we are building this relationship at this moment. And then the third one is to have pilot exercises or sandboxes because the regulations for both sides are shifting or changing very rapidly. So we should have like a small pilot exercises or sandboxes where we can discuss what are the changes and the implications in these regulations so we can have a mutual understanding and not surprises when we have trade finance processes between us. Thanks.
We look forward for increasing collaboration between India Exim Bank and Bank of Mext with the support of ALIDE, which can help all these Indian and Latin American companies. Now I'll quickly move to Mr. Jagrut, a brief response. Could you also elaborate on your experience in the region? Where do you see the biggest untapped opportunities in Latin American markets for Indian pharmaceutical companies? Mr. Jagrut?
So in terms of opportunities, we as a Troika Pharmaceutical Limited strongly believe that there is a need of, the concept of NDDS, which we follow. And by NDDS, I mean novel drug delivery system, where, the pharmacoeconomics of, the entire ecosystem has been, on the focus of it. What we believe is, the administration of any pharma product should be in a way that it is, easy for a patient to administer a product. Either they can do that administration on their own. So what we believe, and there is a lot of opportunity for countries involving Latin American countries, would be in terms of innovation, whereby we will either bring a new chemical, a new pharma medicine into an existence, or we will change the administration of existing molecules in a manner that will be more patient friendly in terms of the economics of the administration as well as the ease of operation. And that is our motto in terms of one of the leading pharma companies of India.
Thank you, Mr. Jagrut. I'll move to Mr. Manoj. Mr. Manoj, despite India making major headway in automotive sector and LAC markets, Chinese presence remains strong in the sector, especially in electric vehicles, by leveraging cost-effective, tech-advanced models, significant investments in local production, especially in Brazil and Mexico, and control over EV supply chains like lithium mining. What do you think of growing Chinese strength in the sector and LAC markets, and where do you see opportunities for India? Mr. Manoj?
Right. As you know, the Chinese aggression overall, across the world, it's a big challenge for the auto industry and the Indian industry. Because as you rightly mentioned, they have the control over the supply chain. That's why they come with such kind of the low cost product with the high specs product with such a price. And one thing we must understand that Chinese or the private company on the backed by this Chinese government. So they have the financial support of the Chinese government, People Republic of China. So as an Indian industry, I feel that we should appreciate the fact and we should learn from the China how they are doing that. And as a complete package, we should come to present to the Latin America. So as an Indian auto industry, pharmaceutical industry, and the banking sector come together, the product price plus how we can combine together and come across as a complete package for our channel partners and importers in the Latin America, then we can definitely take a head on with this Chinese aggression. And as we know, because China, who is the number one electric AV company in the world now, it's no more Tesla, it's BYD. So, and in last visit my China, I will give the one example which will give the idea. I was in the Hong Kong, and then there I saw the logistic arrangement. So in the same container, they were exporting the electronic products like a washing machine and TV, and along with that there was the toys. So I just asked how you can combine the two companies' different product in one container. They say ultimately it is the cost of one container. If you can combine two company product together, ultimately the landing cost will be very competitive. So I think that is one thing as an industry and as a government we should learn, and we should start thinking from that perspective if we have to really take on this Chinese aggression.
Thank you, Mr. Manoj. Now I'll move to Mr. Rakesh. Mr. Rakesh, there is a growing discussion about Indian companies increasingly taking on long-term sponsor roles in LAC infrastructure beyond pure EPC. Since you are there, we want to take your views on that as well, especially in areas like renewables, transmission, and digital infrastructure. From a sector perspective, is there evidence of rising interest in such sponsor roles? If so, what changes in the risk-sharing frameworks and policy support of structured trade and project finance would be most important to accelerate this trend? Mr. Rakesh?
Yeah, thank you, sir. What is happening is that earlier infrastructure used to be developed by, either through the government funding or through the multilateral agencies like EBRD, ADB, and World Bank, AFDB. But nowadays, most of the countries, especially in Latin American market, is asking for a developer mode, where you want to see that EPC company come as a developer and then they execute the project, and then the money distribution comes. Now, with this situation, the Indian companies are at a disadvantage because of the fundings. Because the funding from the Chinese agencies are cheaper, funding from the Europe is much cheaper. So we have to work out a model where you can say the complete modeling for as a developer has to be seen in such a way that the payback periods can be deferred out, or it can be deferred to the level where the real production or revenue start coming. So that kind of modeling is very, very critical. Otherwise, most of the Indian companies are leaving. We are having the field of, you can say, data center, renewables, transmission, distribution, and roads. So these kind of developments which are taking place, we have to think a remodeling where the payouts are in initial stage for the capex purpose, but the payback periods are slightly longer when the revenue stream start coming back. So that was my suggestion, sir.
Rakesh, now I'll move to Mr. Fausto as the last question. Mr. Fausto, what are the constraints faced by the LAC region in accessing trade finance? Going forward, how do you envisage the trade finance landscape in the region to be evolved?
I think, as I mentioned earlier, there, first of all, the cost is extremely high. Yeah, so that makes it very complicated for any player to access trade finance. There is some currency risk, but lately that's not even the biggest worry. I think there's a lack of players. I think the Brazilian banks are very much focused on finance domestic trade, finance the investments in Brazil, denominated in reais. And there's a space, a gap for international banks, export credit agencies, etc. I think it would be very good if those international banks, financial institutions could do a blended finance where Brazilian development banks, we have many regional development banks, could access funds and they could provide, risk management locally and help in a number of things. So I think that kind of partnership would be instrumental to help Indian players to grow in Brazil.
Thank you, Fausto. I think that was a wonderful, panel discussion. While we may get some questions now, but I think we will send those to them to have a bilateral thing. We will facilitate. To just conclude, just want to mention that the relationship between India and Latin America and Caribbean opens a window of opportunity in a post-pandemic armed conflict and climate crisis-stricken world. The two blocs have complementary economics and hold a series of strategic resources that could leverage the trade and investment ties for mutual benefit. Trade finance is not just a facilitator, but a strategic catalyst for unlocking India's trade potential with the LAC region by reducing risk, unlocking liquidity, and enabling sectoral diversification. By providing direct and structured trade finance solutions at each level of value chain, trade finance can expand trade beyond traditional commodities to value-added goods and services. As I earlier mentioned, Exim Bank will be happy to collaborate with institutions like Bancomext with the support of ALIDE and help our panel companies as well as participants. Thank you so much. I'll hand over to Snehal.
Thank you, Mr. Sivkumar, and thank you, panelists, for such an insightful discussion. I'm sure our participants have gained much more from this insightful discussion. Now for the vote of thanks, I invite Mr. 𝗵𝗱𝗱𝗀𝗀𝗃, Resident Representative, India Exim Bank in Sao Paulo, to deliver his vote of thanks.
Thanks, Nehal. A very good morning to our friends and partners across Latin America and the Caribbean, and good evening to our friends and partners joining from India. I know it's a little bit late. It is my distinct privilege to propose the vote of thanks for this inaugural joint webinar between India Exim Bank and ALIDE. Today's session has been a significant step towards our shared vision of unlocking opportunities and strengthening the economic bridges between our regions. First and foremost, I would like to express our sincere gratitude to Ms. 𝗳𝗃 Bangari, Managing Director of India Exim Bank, for her leadership and for setting the context with her opening remarks. We are equally grateful to Mr. Edgardo Alvarez, Secretary General of ALIDE, for his presence and for partnering with us to create this platform for dialogue. I'd like to thank our presenters today, Ms. Andrea Sanchez, for her insightful presentation on the institutional services offered by ALIDE. Ms. Trupti Matre, General Manager at India Exim Bank and Head of Trade Finance, for walking us through the bank's diverse product suite. A special thanks goes to Mr. 𝗳𝗍𝗶𝗱𝗱𝗀𝗀, Chief General Manager, India Exim Bank, for skillfully moderating the panel discussion. It has been really very encouraging and very engaging. I must also extend our deep appreciation to our distinguished panelists who shared their real-world expertise and strategies. Mr. Fausto from Nanoford, Brazil, Mr. Zagrud from Troika Pharmaceuticals, Ms. Karet from Bancomex, Mexico, Mr. Manoj from Eicher Motors, and Mr. Rakesh from SAE Towers. Your perspectives on mitigating risk and utilizing trade finance are vital as we strive towards our shared vision of taking trade between India and the Latin American and the Caribbean region to new heights. I would also like to acknowledge Ms. Snehal Banghera for her excellent coordination of today's proceedings, as well as the entire organizing teams at both India Exim Bank and ALIDE. I'm currently sharing the contact email IDs for both India Exim Bank and ALIDE on the screen. Please feel free to note this down and reach out to us for any queries you may have or discuss opportunities for future engagement. I'm sharing it. Finally, thank you to all the participants, exporters, importers, financial institution representatives for joining us today. We look forward to continuing this dialogue and seeing you at the future engagement. Thank you very much, and have a good night for India. And thank you to all, and have a good day for everyone in Latin American region. Thank you so much.
Thank you all. We were bang on with the scheduled time. Thanks, everyone. Bye.
Thank you. Thanks.
Bye.
Thank you.
Thank you.
Thank you. Thank you.
Bye.
Thank you all. We now conclude this webinar.